Am I audible? Am I both audible and visible? So, very good evening, everyone. Today, we are going to start with our concept oriented classes, come exam problem related sessions with regard to the financial management. So, the observation number one before we start with the discussion on financial management, let me first put you certain words before you such that your mind will be prepared accordingly. Number one, number one, what we are going to cover in this particular class. When I say in this class, mean not today's class, throughout for FM classes. What is the coverage? If that be the question, the answer is we are going to cover the full syllabus. 100% syllabus we are going to cover, which also includes theory. Which also includes theory. So you can see here now, we are going to cover the full syllabus, that is the 100% syllabus, including theory. We are going to cover everything. Clear? So now screen is visible to everyone. Now the screen is visible, everyone. Okay. So what is the coverage? Full syllabus will be covered, which is 100% syllabus, including theory. When it say a full syllabus, coverage of what materials? Okay, I mean the sources. What we are going to cover. As I already said you, complete question bank and integrated concepts, in-depth analysis. So what does it actually mean? Let me explain. When I say complete question bank, my question bank contains study material questions, previous exam questions, RTP questions. It also contains MTP questions. This time we integrated some integrated AI questions. Same RTP, MTP questions, how they can change. I will show you. I have 18 questions integrated with AI. AI means not normal chat GPT AI, something like that. CA Institute is having its own modeled AI called as a CA GPT. So they modeled through chat GPT only, but tailored made according to the needs of ICA. So using that, I have integrated and kept the questions to get the samples as to how they can ask, because now this has become a trend to ask questions on AI based. Clear? So that's why I said, yesterday also I said, FMDTA most dangerous than law. So law, you will definitely do well. But DT and FM, you need to understand minutest of the details as well, because they are asking questions in a horrible way in exam. So study material question, previous exam question, RTP questions, MTP questions, and integrated AI based questions. So these are all we are going to do in the question bank. So separately, you need not do study material. Next, integrated concepts. Sir, what do you mean by integrated concepts? See, as I already said, regular classes la power play batch is a regular batch only, but with a 2 months of validity. That's it. So regular batch la what we will do? I will first explain you the concept, formula, analysis, interpretation, derivation. Then we will go to the problem. Now exactly we are going to do reverse there here. And what we are going to do? We will take a problem. In that problem, whatever the concept is there, only to that extent we will going to discuss in depth. Not normally. In depth we will go and we will analyze. Okay. After every concept, important noticeable adjustments we will write separately in a note. Clear? Like how in the law yesterday we made a separate book, separate side for writing all the key points. Like that in FM, what we are going to do now? Chapter wise, we are going to write important adjustments. Clear? And what are the most important adjustments one has to keep in mind? For example, we are going to do ratios chapter. Ratios la normally every ratio la we will do the answer, but sometimes some assumption changes will come. So how to do that? We are going to write in the keynotes such that you will remember forever till you go to the exam. Clear? And FM will change your fate in final as well, because the FM what you are going to study here is going to carry in the name of AFM at the A final. Clear? So today the session is on FM and DT. Today's session is on FM and DT. Yesterday it is on law and DT. Today it is on FM DT. Tomorrow it will be on law and FM. Clear? Like that every 3 days. All the three subjects we are going to cover in this way. Every day 1.5 hours we are going to spend on each subject, and we will drag that like that till the exams, and we are going to get a best results possible. Clear? This is a unique idea that we have got. All the three subjects, rather than completing first law, after the DT, then pressure will be mounted to the students as well. Clear? Therefore, consistently we are going to do the hard work for the next coming 70-75 days. Are you all with me, everyone? With regard to the app, everything I will tell you today. At the end of the video, I will tell. Up to here, everyone understood the point clearly? Okay, done. See here. So first thing, with regard to the FM, what is our order of study? Means what we are going to do, in what order we are going to cover. I will cover in the order of highest marks, descending to ascending order. Okay. I am going to cover 8 marks chapter first, 8 marks or 7 marks like that. Next I will come to 4 marks to 5 marks chapter. Next less than 5 marks. Lastly theory. Sir, what are all the chapters? Can you please explain the names of the chapters? Yes, listen. First I am going to cover ratios, capital budgeting, working capital management. Next I am going to cover dividends, cost of capital, capital structure theories. Okay, 4 to 6 marks, sorry, not 4 to 5, 4 to 6 marks. Actually, dividend should come here, leverage should come here. So 4 to 6 marks, less than 5 marks, and 3 marks, the 2 marks questions will come from dividends segment. Okay, so ratios, capital budgeting, working capital, leverages, cost of capital, capital structure, dividends. Finally, the theory. Theory, 2 chapters are there. Both the 2 chapters. Okay, both the chapters. This is the sequence in which we are going to cover. Now students also will get confidence. We are not going to start with all bacha nonsense concepts at the beginning. We are going to start directly with the 8 marks area. So, and again I am telling you, question bank la every unique question we are going to do. Every unique question. Difficult, easy, big, small, we are least bothered. We will do everything stepwise, complete answer we are going to do. I am not going to just vouch and see here. See, say for example, randomly I will take one question. Question number 24 is there. We will first read this question. Okay, this entire question we will read. After that, I will not tell net profit 4,87,500, income tax. So, this is the balance sheet. Okay, like this we are not going to do. If that be to be done, you can do it on your own. That is not our intention. We will read the question together. We will understand it. We will analyze it. Then I will give 2 minutes time for you to read the question. Then we will start solving the question together, stepwise, in order to get 8 marks. How to present the answer we are going to do for all the problems. I am not telling 1 or 2. If we do 20 unique questions, 20 unique questions we are going to follow. So that is the intention, that we are putting the session for long 70 days. Why? So slowly, when we go on doing that consistently, that will become a habit. Habit become success. Are you clear, everyone? Everyone, are you with me? Understood? Okay, capital budgeting means investment decisions. So someone is asking investment decision. Investment decision and a capital budgeting. Another name, a synonymous name given for the capital budgeting is investment decisions. Clear? So, what is our target? How we are going to proceed towards the success? We are going to achieve success together. We are going to challenge ICA. We are going to qualify this attempt. We are going to enter CA final. We are going to take this session seriously. We are going to make our parents proud. We are going to make ourselves confident. We are going to make ourselves motivated throughout the classes. Clear? So pledge yourself that you are going to stay awake and you will arise and you will be successful in the coming examination, irrespective of the type of question paper that comes. Clear? That confidence of irrespective of question paper will come when you do everything with quality, confidence, as well as with a clarity. Just doing questions won't survive. Just knowing concept, not doing problems won't survive. Doing both but not solving as per stepwise, as per IC also will not survive. You should do all consistently to become a very good marker. Clear? ICA study material is enough or not? Question. ICA study material is enough, pakka enough. But already we have done, na? We have to do something new this time. So lot many new questions let us take. Okay. Yeah. So let us begin. Just for today, you see this particular notes. The next tomorrow, I will share this ratios analysis entire question bank to you. Okay, va? So no worry. So anyway, let us first understand what is our strategy for FM. See, again, I am repeating. We are going to start first with ratios. Once ratios are completed, we are moving into the segment called as capital budgeting. Once capital budgeting is completed, we will move to the area called as working capital management. In working capital management, again, we are having multiple segments. Working capital estimates is there. Next, receivables management, also called as debtors management. We have cash management. We have inventory management. We have payables management. Okay, all these we are going to do in this. In the exam point of view, first three are very important. In that first two are most important. In that first one is extremely important. Clear? So I told you the importance also, in what way we need to study. So we are not going to leave these three. First, if you can grab the attention of all the three chapters, out of 50, 25 marks is secured for you. Yes, 25 marks are secured here. No one can take the 25 marks from you. Clear, everyone? This 25 marks is secured for you. 100% you are safe with regard to this 25 marks. Next 25 marks will come from these areas. In this, again, 18 marks will come from this segment. Finally, 6-7 marks will come from this segment. Everything is equally important. I'm not telling theory wasted, leave it. Fool only will tell like that. I can't tell that leave theory. Previously, I used to tell study theory whenever you find them, but now this time I will only take up even theory as well. So the student will understand in a better way. Clear, everyone? Shall we begin? Everyone reply. Shall we begin with the class? Very good. Let us begin with the chapter ratios. Everyone keep the heading. FM separate book you maintain, because we are going to do lot of problems with clarity, everything. Notes also I am going to give you. So please keep a separate notes for that. Put a 200 page, 150 pages or 200 pages, small one, but maintain a separate book. Okay. Keep the heading first. Ratios analysis. Ratios analysis. Ratios analysis. Okay. Ratios analysis. See here. When it comes to the ratios chapter, see, these are the 6 set of ratios which are very frequently tested in exam. Apart from these, there are some more ratios also, around another 6 7 ratios are there. We will do that only when the occasion occurs for us. For example, when you are doing a question, you find a new ratio, then we will learn. But these ratios we need to learn first, and then only we have to do the problems. Am I clear? So learning the basic ratios is the first key point of this particular discussion. See here, liquidity, sorry, there are 6 kinds of ratios: liquidity ratio, capital structure ratio, activity ratio, sales profitability ratio, capital profitability ratio, miscellaneous ratios. Tell me, what is the first one? Liquidity ratio. Liquidity ratio lo there are 2 ratios: current ratio, acid test ratio. First one, current ratio. Second one, acid test ratio. Let me explain. Like in a regular class, I won't take 1 hour to explain. Like in a quick revision, 2 3 minutes I will not. I will take a 7 8 minutes time, decent time. I will first explain you the concept behind what is a current ratio, what is an acid test ratio. Then let us start doing the questions on that. So I will explain you current ratio, acid test ratio, capital structure ratio also I will explain you. Then activity ratio, then sales profitability, capital profitability, miscellaneous. Let us start doing the questions and answers by applying the knowledge we are getting now. Everyone clear? Okay. Yeah, let us begin. First one, what is a current ratio? What is a current ratio? See, current ratio is a ratio which will make us understand, how much of current assets are there to pay your current liabilities. I repeat one more time. Current ratio will always say how much current assets are there to pay your current liabilities. Is the question. Sir, I didn't understand this. Sorry, I will explain you the point. See, I am purchasing a house. Okay, I am purchasing a house for my residence. Definitely I will stay there for around 30 40 years, undoubtedly. And the nature of that asset is buy today and sell tomorrow, or I wanted to buy today and hold it for 40 years, buy today and hold it for 40 years. That asset for me is called as a fixed asset. That asset is called as fixed asset. Clearer? Number one. Okay. Always remember one thing. Whenever you purchase fixed asset, you require money. From where you have to get the money? Either out of your pocket you need to give, or you should take a loan and you need to buy. Okay. But listen carefully. When you are taking a loan and purchasing a fixed asset, this loan and the term of that fixed asset at least should match 70 80%. Sir, I didn't understand also this. Listen, how many years you wanted to stay in that house? 30 years. At least loan you take should be for 20 25 years. Yeah, such that you will repay your loan slowly. If you purchase a fixed asset out of a loan for 6 months, what will happen? You will purchase a fixed asset. My salary 1 lakh per month. Example, my salary 1 lakh per month. Okay, that's cash inflow. Every month 1 lakh, 1 lakh, 1 lakh, 1 lakh, 12 lakhs I will get per month, per annum. Every month I will get 1 lakh. Clear? I purchased a house worth 2 crore. Monthly EMI 2 lakh. Monthly EMI 2 lakh. 22 crore rupee property I purchased. On that the EMI is 2 lakh per month. My salary is 1 lakh. I took a loan. 2 crore loan I have taken and I paid and I purchased an asset. Now to the bank I need to pay 2 lakh EMI or not? Okay, the bank I have to pay 2 lakh EMI, and they said 2 lakh EMI I have to pay or not. So I have only 1 lakh with me. 1 lakh is the cash available, 2 lakh is the cash to be paid. My current liability is more than my current asset. Cash is a current asset. EMI to be paid is a current liability. So my cash is not eligible to pay entire EMI. I am not having a proper liquidity. I'm not having a proper liquidity. And shall I tell you what does it mean? I lost my solvency. I became insolvent. Why I became insolvent? I have 1 lakh. I need to pay 2 lakh. I am having minus 1 lakh deficit. That person will take my properties for that 1 lakh. I became insolvent. That's why these are also called as short-term solvency ratios. Everyone reply understood? Everyone answer understood? Clear? So that's why they call this as a short-term solvency ratio. What do you mean by a short-term solvency ratio? Whenever your current assets are not capable of paying your current liabilities, we call such a situation as short-term solvency. Your short-term solvency is very bad in this example. I will give multiple examples, listen carefully. But one time only I will tell. One example completed. Second example. Same example, let us continue and understand in a different way. I purchased a house property. House property is 2 crore. I took loan from a bank worth 2 crore. So 2 crore loan is there, 2 crore asset is created. Previous example, 25 years loan. Every month 2 lakh. I have only 1 lakh. Liquidity not matching. Liquidity is less. Solvency lost. Became insolvent. Financially unstable. Analysis 1. Analysis 2. I purchased an asset worth 2 crore. Taking a loan worth 2 crore. 2 crore loan repaid this. 2 crore loan purchased this asset. But for the 2 crore, I have to pay money or not? I kept a loan for 6 months. I kept a loan for how many months here? 6 months. Means what I said I will pay within 6 months. Now what happened? Long-term asset is purchased using a short-term liability. This is the extremely more crores of times dangerous than the previous example. Why? Always a long-term asset should be purchased out of long-term liabilities. Here what you have done, short-term liability, you are buying a long-term asset, it will definitely make you insolvent. First example may make you insolvent, may not make you insolvent. Second example will surely make you insolvent. Okay, how? Let us understand. I purchased an asset. Okay, I purchased an asset worth 2 crore. I created a liability worth 2 crore. Okay, this I said I will pay in 6 months. This I will pay within 6 months. My salary is 1 lakh per month. You have to pay 2 crore rupees in 6 months. How you will pay 2 crore rupees in 6 months? Yeah, how you will pay? You can never pay. Okay, with your earning, with your regular income of 1 lakh, how will you pay this 2 crore rupee? Sir, he is having properties, sir. All these are stories. I am talking about that 1 lakh matched to the 2 crore. So your regular income is 1 lakh. Your amount is 2 crore. How you will pay? 6 months la how you will pay? Yeah? This 2 crore worth building you are going to use for 30 years. A long-term asset is purchased out of a short-term liability which is never ever permitted. Do you know what will happen? See, 6 months completed. Bank will come to you. They will say, Paushi Mukesh, pay me 2 crore. They said, sir, 2 crore. My salary is 1 lakh, sir. You are asking 200 times higher. I can't pay. You can't pay now. Then I will take this asset. I said, okay, take the asset. Then why you purchased? Then why you purchased for staying for 6 months? Huh? For staying for 6 months, you purchased that asset. Huh? Second, no, sir, I wanted to stay in this house only. Then what you have to do? You have to sell your other properties and then you have to pay. In this also, you are losing asset. So you are a loser if you purchase a long-term asset out of a short-term liability. Out of what liability? A short-term liability. Everyone understood this example clearly? Everyone reply. Okay. So what is the overall idea? Short-term assets, long-term assets. Short-term liability, long-term liability. Okay. See, short-term asset purchased out of a short term liability, permitted. Short term asset purchased out of long term liability, this is also permitted, no problem. Reverse is dangerous, straight is not dangerous. Okay, ma? Sir, why, sir? See, most of the companies, do you know what they will do? They will take loan from bank. They will take loan from bank. 90% they will use for purchase of fixed asset. Remaining 10% is there na. Using that they will pay wages, they will pay for raw material, like that they will pay. Long term liability can be used to pay short term asset. So short term assets like current assets can be purchased out of current liability or even out of long term liability. But long term asset purchased out of short term liability is not at all allowed. Okay. So long term asset out of a long term liability, long term asset out of a long term liability is permitted. So what is not permitted? Short term asset with short term liability, permitted. Short term asset with a long term liability, permitted. Long term asset with a short term liability, big no. Long term asset created out of long term liability, permitted. Everyone understood the equation clearly? Everyone understood the equation clearly? Reply, reply, reply. Don't sit idle. Okay. Now what you have to do now? In the notes you kept the heading now, current ratio. Okay. So ratios analysis. In that first you need to keep the heading liquidity ratio. Liquidity ratio. A current ratio. Write down. Current assets divided by current liabilities. Current assets divided by current liabilities. Below write down additional analysis. In that you have to write this. You write down fully or else you won't remember. STA, STL, like that you don't write. Short term asset with short term liability. Short term asset with long term liability. Long term asset with short term liability. Long term asset with long term liability. Completed? Yes, one person is asking the question. You can listen to these classes even if you are first time. Am I going fast? Am I explaining overall basis? I am explaining in depth only. Na? Happily, you can continue. Okay. Yeah. Next. So we completed one part. Hey, listen, everyone. When we do the problems, you should not sit silent like that and listen. You should react and you need to do the questions. Okay. Next, current ratio completed. Okay. Additional analysis law, what you have written. Okay. Short term assets, long term asset, long term asset. Short term asset created out of short term liability, long term liability. Short term liability, long term liability. Okay. Short term asset created out of a short term liability. Perfect combination. Short term asset by long term liability, not perfect, but okay, no problem. Okay. Most of the companies are doing it, and we also find so many problems on that. Okay. So, next, long term asset by short questions, you would never find this, but you should not do, you should learn this. Long term asset purchase out of long term, perfect combination. Every company capital budgeting chapter, what we are going to learn, cost of capital. You raise capital, you put the capital budgeting we are going to see. Clear, everyone? So the additional analysis that we need to understand. Okay, well, so current assets by current liability, current assets by current liability. One thing we need to understand, if additional analysis I will write it, if current assets is less than current liability, company is in danger. Company is in danger. What danger? Insolvency danger. What danger? Yeah, insolvency danger. And guarantee, yes, sir. Guarantee, I am not telling. Danger is there. When I put a danger signal there, what does it mean? Definitely you will die. Yeah. Chances are there. So it's a danger sign. Insolvency, it's a danger. See, just because of the reason that my current assets are less than my current liabilities, always I may not become insolvent. I may have huge fixed assets. I can sell and pay you the money. So always you cannot tell. But definitely there is a chance you can become insolvent. That's why they call it as a solvency ratio. Are you all with me, everyone? Okay. So listen carefully once. I should see only subject related questions from now. We started long back, half an hour back. So whatever the questions you put in YouTube, that comment box should be related to our subject from now. From now, all your related doubts, remaining things, I will discuss at the end of the session. Yeah. Okay. Well, please, you also try to understand. So, if current assets are less than current liabilities, company is in a danger. Which danger? Insolvency danger la company is in. Why? Your current assets are less than your current liability. Do you know what do you mean by current assets less than current liability? Do you know the real meaning first? See, your continuous business generates assets. Stock is your business asset. Business asset means day-to-day asset. Cash, day-to-day rotation. Okay, all these, okay, should be more than your current liability. Means you purchased goods on credit, current liability is created. Goods on credit, current liability is created. Okay, you sold raw material, but you did not sell fully. Means what? Your current assets capability is lesser than current liability. Means you are running business, whatever you are doing, you are not doing it properly. It's a sign of inefficiency in the business. Okay, well, so next one, B, write down. liquid ratio or acid test ratio. Liquid ratio or acid test ratio. Okay, write down. Liquid ratio, whenever I say liquid ratio or acid test ratio, the concept is very simple. What they wanted to convey in a liquid ratio or acid test ratio, quick assets by current liabilities. Write down. Quick assets by current liability. Quick assets by current liabilities. Quick assets by current liabilities. Sir, what do you mean by quick assets by current liability? Question will arise now. Listen. What is a quick assets by current liability? One should understand this particular concept. Okay. See, what is a quick assets by current liability? Current assets, what will be there? In current assets, we will have cash, debtors, stock, next one, prepaid expenses. All these things will be there. Correct? Now listen carefully. My point is, current assets ratio, current ratio, what we discuss, current assets by current liability. For example, in current assets ratio, I got 1.25:1. Okay, what does it mean? For every 1 rupee of current liability, I am having 1.25 rupee of current asset. Or for 100 rupee current liability, I am having 125 rupees of current assets. So my company is having enough solvency. Are you listening? Now listen carefully. I will draw one balance sheet and show you. Okay. See, concept important for ratios chapter. I am telling very, very clearly. Once a problem start, I am not going to repeat even a single ratio. Directly we will see the question, understand the problem, put the ratio, get the answer. That's it. At that time, sir, what is the meaning of this ratio? Don't ask me, I will not repeat. I am telling you very seriously. Why I am spending this much time here? The only reason is, later at the time when we do the problems, I should not waste my time in repeating the concepts again. Okay, well? So let us see. First, balance sheet I am having like this. Cash 100, everything is in lakhs. Cash 100, debtors 50, stock 100, prepaid expenses, let us say another 50. Okay. Other sides of the liabilities I don't want. I want only two liabilities. One is a short-term loan. Another one is a current liability, also called as a creditors. Also called as what? Creditors. Okay. Short-term liability, let us say for example, is 200. Creditors 100. Creditors 100. Okay. Now listen carefully. I am having 300 of, okay, or I will write this way. Creditors 50. I am having current liability of 250. I am having current assets of 300. What you will tell? Current ratio 300 divided by 250. Take calculator and check. 300 divided by 250. 1.2:1. Clap. Super company, sir. 1.2:1 abba super company. இந்த மாதிரி கம்பெனியே இல்லை சார். So therefore 1.2:1 super ratio it is. Company is very healthy financially. No. Shall I tell you the reason? Listen carefully. Current asset, this short term liability 200 is there na? This you have to pay in 3 months time. Example. This creditor you have to pay in 3 months time. And both of them you have to pay within how many days? 90 days you have to pay them. How many days? 90 days you have to pay them. Now listen carefully. Cash, okay, 100. Cash is already in the form of liquid cash. So immediately I can pay. And out of this 250 of current liability, 100 cash I can pay immediately. Okay. Next, prepaid expenses. I already paid. Nothing I can do. So this is useless for me now. Though prepaid expense is an asset shown on balance sheet, I already paid. My cash has went out. Future liability won't come, but that doesn't help me now. So that 50, I can't do anything, though it is an asset. Okay, sir, I have debtor. Debtor is a quick asset only. Undoubtedly, debtor is a quick asset. But debtor I have given 4 months of credit period. How many months here? 4 months of credit period. I have to pay them in 3 months. Now, what problem will come? I have to pay them in 3 months, but my person will pay me only after 4 months. Now, I should give some discount to debtors if they prepone the payment and I have to get my money. There is a slight difficulty in recovery of debtors. So, even though difficulty is there, but recovery is possible. So, we will take debtors also here. Okay, difficult, but okay, taken. Quickly we can convert them. Problem will come with the stock because nothing is in our hand. See, stock, there is a problem. Stock should first sold, turn into debtors. Debtors should again become cash. This will take a lot of time. Quickly this won't happen. It will convert into cash in 4 5 months. But quickly if you want, I can't tell. So now you tell me, short-term liability is there 3 months after. Your home is having door you open, two people are waiting outside, or a bank or a creditor, two people are waiting outside the door. You said, inga ukkar sir, ukkarunga, so please sit here, just 2 minutes, I will come. You came and said, what is the point, where you came? He said, my 200 lakh. He said, my 50 lakh. Okay sir. Sir, for the bank, I said, sir, please take this 100, please take this what 100. Okay, please take this 100. Debtor I said, sir, please take this 25. And again, bank said, you also take this 25. And what I did, I have 150 immediate recovery. In this 150, I said, sir, short-term liability of 200 is there. Na? In this, sir, 125 you take, sir. In this creditor 50, you take 25, sir. Like this, I said. They said, what 125, what 25? You have to pay me 200. Creditor said, you have to pay me 50. Why you are paying half? Or why you are paying only part amount? He said, sir, I have current assets, but the current assets are in the form of stock, sir. Stock I need to sell. Sale is not in my hand. Na? Customer have to come. Sale will become debtor. Debtor has to become cash. For that time will be taking. So you wait. Current liability person will wait. He will hit. Therefore, current ratio is important for understanding overall liquidity. But a real ratio that you need to understand is a quick ratio, because it will always talk about how quick your current assets are getting converted into cash. Therefore, quick assets is nothing but current assets minus stock minus prepaid expenses. This is how the formula is derived. Everyone, answer enappa purinjida everyone. And we also discussed that in the previous regular class. Everyone. Clear? So, therefore, we completed two ratios. That's what I said. Na? Understanding we will take time, but problem solving we will do very fast. So, current ratio, asset test ratio, quick ratio, liquid ratio, whatever. See, current ratio, current assets by current liability. Liquid ratio, liquid assets by current liability. Liquid assets, current assets minus stock minus prepaid expenses. Okay, va? Okay. Now, in your notes, what you have to write? Keep the heading liquid ratio. Write down this. Below, write down quick assets equal to you write full forms. Completed? Completed, everyone? Okay. Now, next one. So, we completed current ratio and liquid ratio. Next one, capital structure ratio. What is that? Capital structure ratio. Keep the heading here. Keep the heading. Capital structure ratio. A. Debt equity ratio. Listen here. Listen. First, I have to tell you the assumptions followed by ICA. Or else later, sir, debt equity ratio, why I should not do like this. Like this, you will ask doubt 1000% you will ask. So I am not going to explain anything once we start the problem because I am explaining everything now. Whether to listen or not is entirely your discretion. That I can't do anything. But what is my purpose here? My purpose is to explain every point as I promised you. Every point I will discuss, every question I will do, I will make you complete exam ready for at the level of CFA. International exams also you can write if you listen to the discussion properly. That I can do. Okay, I can take a horse up to the pond, but I can't force it to drink water. Na? So therefore, please listen carefully. So now let us understand what is a debt equity ratio, what assumptions ICA is taking. Okay, at a debt equity ratio, people will tell debt by equity. Debt by equity. Adi okay. Debt by equity is okay. But the question is whether preference share capital will come under debt category or equity category. That's doubt. Clear? That's doubt. What doubt? Debt. See, preference share capital is something which is not completely equity, which is not completely debt. If you say it is completely equity, it should not be redeemed, but preference shares are redeemed. If you tell that it is completely debt, if it is not debt, it is a debt because it has to be repaid. So it's not completely equity because they don't get voting rights on all the resolutions in a section 47 of Companies Act. So preference shareholders will get the voting only on any item or a resolution which affects their right directly, or any discussion or any kind of decision taken by the board of directors with regard to the winding up or repayment of capital, whether before or after the winding up of company. Okay, whether before or at the time of winding up, whenever reduction of share capital, whenever repayment of capital happens, or they will get voting rights on all the resolutions in a company if their cumulative preference dividend was in arrears for 2 years or more. Proviso and explanation below section number 47. What we learned here from all these discussions, preference shareholders generally don't get voting rights. Understood? Preference shareholders don't get any kind of voting right in general. And they are not completely equity side. Siri, they are not completely equity. Will they be not repaid money? They will be repaid money like a debt. So they are also having a quality of debt. Debt equity ratio, answer is very simple. Everyone will write down along with me. Debt divided by equity. It is easy. What is included in debt, what is included in equity is a discussion we are going to make. First of all, capital structure ratios, you will get another doubt. Sir, another doubt, sir. Debt is there in numerator. At the debt, what is included? Long-term debt or short-term debt or both debts. Repeat everyone. Reply everyone. Debt ki what should be included? Long-term or short-term? LT or ST or both? So now you can see, everyone see the screen. Mixed answers are coming. Some are telling long term, some are telling short term, some are telling both, like that it's coming now. Listen carefully. Listen carefully. See how much confusion is there in the mind of the students. How many guts you have to go to exam, yeah? You are not knowing the formula for debt equity ratio. How dare you go to exam? It is long term only. Both will not come. Debt equity ratio, the debt represents only long term debt. Are you understanding? Debt equity ratio, debt requires only long term debt. Short-term debts are not included into that. Why? Short-term solvency ratio is already analyzed in current ratio. Now we are going with the long-term liabilities with long-term as a long-term equity. See, owner's fund and owner's debts. Which kind of debt? Long-term. Equity is a long-term asset. Equity is a long-term liability for a company. Debt should not be a short-term. Na? You should compare long-term with long-term, short-term with short-term. Short-term with long-term, you should not compare any ratio. Okay, so therefore both are long-term debts only. Long-term debt, equity is anyway long-term, it will be redeemed only on winding up of a company. Clear? So one person is asking same doubt, can I skip FM if I am preparing for group 1? Your wish. If you are writing FM later, now you listen. No sir, not interested, now you can skip the video. As simple as that. What is that question? How can I tell? If you are writing exam in Jan or something like that, okay, it's your wish. You want to spend time 1.5 hour every day on FM every consecutive day, it's your wish. No sir, I don't want to waste time. No, you don't listen. I'm not forcing. I'm not bringing you and tell you sit here and listen. Kandipa, you have to listen. I did not tell like that. So sir, anyway, debt equity ratio, debt by equity. What is the meaning of this? Okay, what is the meaning of this debt? What is included into debt? That's what we are going to analyze. See, one by one, let us analyze this. Hey, see here. Debt equity ratio. Debt means long term debt. First I have written that. Okay, long term debt. Equity represents what? This I will explain. Equity. So first write down debt by equity you have written. Instead write down long-term debt by equity. Long-term debt by equity. Now doubt also will not come. So from today, debt equity ratio means what you have to tell? Long-term debt by equity. This is the way in which you need to understand. Okay, va? Next. Sideways write down equity. Equity means all owners funds. All owners funds. Okay, all owners funds. What do you mean by owner? Equity shareholder and preference shareholder. Equity shareholder and preference shareholder. Okay, va? Equity shareholder and preference shareholder. So both funds we have to take, and what we need to consider? Equity share capital plus preference share capital plus reserves and surplus. Equity share capital plus preference share capital plus reserves and surplus minus fictitious assets, not fixed assets here. Fictitious assets. What do you mean fictitious assets? Miscellaneous expenses, accumulated losses, all these will come under the category of fictitious assets. So equity share capital plus preference share capital plus reserves and surplus minus fictitious assets. All these together we call as a equity. So equity preference will be included when it comes to debt equity ratio computation. Okay, va? So everyone understood up to here clearly? See here, that's what I have written here. Debt means long-term debt. Equity means share capital plus reserves and surplus minus miscellaneous expenses. Miscellaneous expenses, that is a fictitious assets. Equity means what? Net worth. Shareholders funds or proprietor funds, whatever you call. Okay. Preference share capital is deemed as equity. Very, very important assumption taken by ICA. Okay, well. First of all, everyone tell me, did you write the notes or not? Have you written the notes up to here? Can I move on to the next one? Okay. In some questions, ICA has taken a different assumption. Okay, in some questions, ICA has taken a different assumption. Debt they will include both. Why they include, when they include, I will show you the questions and then I will tell you the reason for the ICA's assumption. Okay, well, next. So we completed debt equity ratio. B point. B. So we completed debt equity. Now next one, proprietary ratio. Proprietary ratio. Proprietary ratio. Proprietary ratio. Okay. See here. Equity divided by total assets. Write down. Equity divided by total assets. Sir, what is this, sir? I did not understand. See, in my company, 100 rupees worth of assets are there. Total assets, fixed assets and current assets together. I have 100 rupees of fixed assets and current assets totally. 70 rupee fixed assets, 30 rupee current assets, 100 rupee of total assets are there. My equity in the company is 70 rupees. What does it mean? 70% of my assets are financed with my own funding. 30 rupees or 30% of my total assets are funded by outsiders. That's the meaning of this particular ratio. Understood? That's the meaning of this particular ratio. Equity divided by total assets. Again, write down equity. Equity share capital, preference share capital, reserves and surplus minus fictitious assets. Okay. If you want, just write down this also. Total assets means fixed assets and current assets. Now everyone tell me, up to here everyone you have written. Can we move on to the further point? Some foundation students are also asking, do we have like this? Yes. For September exam for foundation, we are going to start in the month of July. Okay, sorry, anyway. So we completed debt equity ratio and we completed proprietary ratio. Next, C. Write down capital gearing ratio. This I will explain first. Okay, well, this I will what explain. See, capital gearing ratio is also something similar to, okay, capital gearing ratio is also something similar to that of debt equity ratio, but not completely. I will tell you what is the meaning of this particular ratio. Okay, well, listen carefully. Please, everyone, concentrate. Capital gearing ratio means what? Gearing represents a leverage. Gearing represents what? A leverage. Okay. So, capital gearing ratio means capital which is having a leverage impact. Capital having a leverage impact. So, what is the capital having a leverage impact? See here. There are three types of capital. Leverage, holding capital. Okay, 3 points. Equity, debt, preference share capital. Debt has interest cost which give me financial leverage. Preference share capital has preference dividend, again having a low level of financial leverage, not like debt, but it definitely has some leverage impact. Financial leverage, this will also have some small impact. Okay, because my fixed dividend will be paid. In both the cases, what is common? Common is fixed pay. I will not pay more interest if I get more income. I will not pay less interest if I get less income. I will not pay more dividend if I get more income. I will not pay less dividend if I get less income. These are all fixed commitments. Whenever fixed commitments are there, fixed commitments give a leverage advantage. Leverage advantage. Anyway, in leverages, I will re-explain that. But hope you all listened to my classes already. You understood what I'm trying to explain. Whenever fixed commitments are there, they give leverage impact. Good and bad, both is there. Your revenues are increasing like anything, but you will pay only that fixed amount. Okay, then it is a benefit. Your revenues are falling, even then you have to pay that fixed amount, then it becomes a risk. So both sides of the coin we have to see a fixed commitment. So that's called as a leverage impact. Leverage impact. But equity will pay equity dividend. What dividend? Equity dividend. Equity dividend won't give any kind of financial leverage. Won't give any kind of financial leverage. Equity dividend is a variable pay. And moreover, they will take after all the things are paid. There is no leverage impact. To get a leverage impact, you should become a fixed commitment first. If you are fixed cost will give leverage. Fixed cost will give leverage. See, when you see the income statement, how it look like sales minus variable cost contribution, contribution minus fixed cost will be EBIT. EBIT to the sales will be operating leverage. Correct? Change in EBIT to the change in sales. So why EBIT will change? Because fixed costs are constant. Sales will change, but according to the change in sales, variable cost will change. According to the variable cost, contribution will change. But according to contribution, fixed cost won't change. Therefore, it results in a leverage impact. It results in a leverage impact. So what is happening here? If along with the sales change, if costs also changes, leverage will not be there. Leverage will not be there. Leverage impact will come when only when there is a fixed commitment in your income statement. See, fixed cost is a leverage impacting item. Interest cost, leverage impacting item. Preference dividend, to some extent leverage impacting item. Equity dividend is not a leverage impacting item because it is outside income statement. After income is computed, we will do the equity dividend calculation. For purposes of income computation, what you take, you need to consider. Equity dividend is not for income computation. Equity dividend itself is the income. Hello, I'm talking to you. Everyone, respond. Equity dividend is not a part of income statement. Equity dividend is the final income in the income statement. I think you understood the statement now. Clear? So what is the situation here? Capital gearing ratio means how the form. Why I am telling all these things to you now? You should understand capital gearing ratio formula in a proper sense. Like a fool, you should not just mug up the formula. Kaushik student means how you should be. When you see a formula, you should tell the derivation, interpretation, logic behind what is the intention. Everything you should understand. That's financial knowledge. Just like that, capital gearing ratio, debt by equity, like that you should not study. Then what is the difference between you and all others? That some difference should be there. You should have that command over the subject. You should tell, yes, this is the reason why it came like that. So anyway, let's come back to the story. Capital gearing ratio, such capital which is having leverage should come in numerator. Such capital which is non-leverage should come in denominator. Capital gearing ratio means what? Debt by equity A. But which kind of debt? Debt carrying leverage. Debt carrying leverage. Which debt will carry leverage? Debt plus preference share capital whole divided by equity. Whole divided by what? Equity. Now equity means what? In this, Equity does not mean again preference share capital. Here equity means equity share capital plus reserves and surplus. Okay. Everyone reply. About leverages, we will discuss in leverages chapter. Don't ask now. Okay. There is a respective chapter for that. There in depth we will discuss like this. So what is a leverage? Why preference will get a lesser leverage? Why debt will have high leverage? Everything leverages chapter we will discuss. Don't ask me to tell something which comes in another chapter here. Okay, well? Yeah. So short-term debts are there, na? Another short-term debts. They don't include here. They don't include here. They don't consider. It is a long-term analysis, long-term liquidity. Okay. So equity share capital, reserves and surplus. Okay. Whenever I say equity share capital, reserves and surplus, I need not write. Okay. No, I need not what? Write. It always excludes fictitious assets. Okay. You need not ask me. Fictitious assets is always excluded in any formula. Okay. So this is the formula for what we have written, capital gearing ratio. Next, debt service coverage ratio. Write down. D. Debt service coverage ratio. Debt service coverage ratio. See, formula let us write down first. EBI DTA divided by interest plus installment. Interest plus installment. This will be the formula for debt service coverage ratio. Debt service coverage ratio. I will explain. See here. EBI DTA by interest plus installment. See here. Simple concept. Yeah. Simple. Very simple concept. Listen. Point is EBI DTA full form. Earnings before interest, depreciation, tax, and amortization of any intangible assets. How depreciation is for fixed assets, amortization is for intangible assets. Okay, tangible assets ki depreciation, intangible assets ki amortization. Earnings before interest, depreciation, tax, and amortization. And this is one level before EBIT. One level before EBIT. Not EBIT, one level before EBIT. Because EBIT is a operating income which also reduces depreciation in it. So before reducing depreciation, okay, before reducing depreciation, but after deducting all contributional costs, will be called as a EBI DTA. EBI DTA divided by interest plus installment. Logic is very simple here. Romba simple concept. Okay, please listen. EBI DTA is a revenue. Is the revenue. Which revenue EBI DTA? This is the cash net revenue. Cash net revenue. So why you are calling it cash? Non-cash items like depreciation and amortization are not even deducted. Therefore, it is a cash net revenue. Okay. Divided by interest to be paid in cash and installment to be paid in cash. Means I have to pay interest, I have to pay my installment. To pay that, I should not have something to come in future. I should have something realized already. Therefore, our depreciations, amortizations are not real expenses. You leave them. Before that, you take an amount. This is the revenue available. This is a cost I need to pay every year. Therefore, revenue available. For example, my EBI DTA came to 100. My interest cost is 20. My installments is, say, for example, 40. What does it mean? 100 divided by 60. 100 divided by what? Yeah, 60. So, I have 100 rupees, but I need to pay only 60. 100 divided by 60 na 1.67 times. 1.67 times. Always whenever I use the word coverage will tell something in times, number of times. Means what? I have 1 rupee commitment, but I have 1.67 times revenue to pay that. My company is a very good company now. So this is called as a coverage ratio. First of all, please everyone understood the concept clearly. Yeah? How much is available amount? How much is the fixed commitment to pay? We need to consider that. This is installment. Everyone understood? This is said in times. This is said in what? Times. So coverage ratio means how much income is there to pay our interest and installment portion. Okay. So now we completed another set of ratios, which is what are the two sets we completed? Liquidity completed, capital structure is also completed. Liquidity completed, cap structure also completed. Next one is what? Activity ratios. Activity ratios. Okay. Now, hey, listen carefully. Activity ratios are very important for exam. Okay. See, activity ratios. Please keep the heading. Activity ratios. Okay. Now, what is an activity ratio? That's the other question. See, activity always represents sales activity. An activity is sales, turnover activity. Activity in a company is always sales. So, sales is a common item in all these ratios. Sales or cost of goods sold or cost of sales, like that. Sales related. Okay. See here. Capital turnover, sales by capital. Fixed asset turnover, sales by fixed asset. Working capital, sales by working capital. Data, sales by data. Stock, cost of goods sold by stock. Creditors, purchase. Sales purchases is the items that we are going to consider. Listen, I will tell you one point. Ratios chapter you take, any question in exam, there can be a situation where they may not ask a question on, capital structure ratio or any other ratio, but there is no question till today in ratios where there is no discussion on activity. At a compulsory, every ratios question will touch any of these six or all the six also. Okay, va? So mind, please keep here. Okay, va? So please, I want your 100% attention on the concept now. Clear, everyone? So I just don't want you to deviate from the concept and go to some other world. Important. Okay? First write down. Capital turnover ratio. Capital turnover ratio. Okay. Write down. Capital turnover ratio. Turnover or sales divided by capital employed. Turnover or sales divided by capital employed. So capital turnover ratio. Turnover or sales divided by capital employed. Okay. Shall we? Okay. First point. Sir, what do you mean by logic? We will see later. First, let us understand what do you mean by capital employed. Capital employed. When I say capital employed, you can tell this in two ways. Number one, from liability side, from assets side. From liability side, from assets side. Okay, va? When I say from liability side, capital employed means, okay, debt plus equity. Debt includes short term and long term. Total capital. Okay. Capital employed a full capital. This is one way. Total debt, total equity, full liability side you total. We call it as liability side total of capital employed. Assets side of capital employed, how it look like na? When you take raise capital, when you raise capital from equity, when you raise capital from debt, okay, when you raise capital through creditors, what you will put it in dustbin. Using that money, what you are going to do with the money raised from equity, with the money raised from debt, long term, I will purchase fixed asset. Okay, with the money raised by, with the money raised by, from the money that is raised from what to say short term liabilities, I will take short term assets. So fixed assets plus current assets, fixed assets plus current assets. So I will take from assets side, if you wanted to tell, it is a fixed assets plus current assets minus current liability, minus current liability, also called as fixed assets plus working capital, also called as fixed assets plus working capital. First write down up to here. Okay. Have you completed? Everyone. Can we move to the next one? Reply everyone. Okay. Okay. Now listen. See, liability side, assets side, I said na. See here. Normally, capital employed represents a debt and equity. Okay. Then what you will take? Short term plus long term debt, equity we have to take. But ICA has taken a different assumption. You have written everyone. Now what you have to do now? Different color pen. What you have to do is strike off short term. Write down ICA such that you will remember forever. Okay, when we are doing questions on ICA point of view, capital employed we should not include short term. Okay, why na? Assets side, they are not taking fixed assets plus current assets. They are taking fixed assets plus current assets minus current liability. Minus current liability, when they do, what they are removing the short term liability. So when they remove short term liability on asset side computation, how they will include short term liability, short term liabilities on the liability side computation. So that's the reason. Okay, well, so this is the institute assumption. They can also do in a either way, but for this, these people are doing in this way only. So debt plus equity. Debt means only long term debt. Equity, you know already what is the meaning of equity. Fixed assets plus current assets minus current liability they are taking. Since they are removing the short term liability in assets computation, you should remove short term liability also in the liability computation. Okay, well, creditors is an example of short-term debt. Bank loans for somewhere around 3 months or 4 months or 6 months or those short-term loans, classic example of a short-term debts. Okay, those should not be included when you are computing capital employed. So logic very simple. Turnover or sales. What does it mean? Turnover or sales means whenever you do some sales, sales generate revenue. Sales generate revenue. But how come you can sell? You should first raise capital. Raised capital you need to invest. That investment should be made in assets that will generate revenue. Means capital is the reason for the sales. Capital is the reason for the sales. But how good you are using it? For example, my turnover during the year is 120 rupees. I invested 100 rupee capital. What does it mean? 1.2 times. 1.2 times means for every 1 rupee I invested, you are generating 1.2 rupee of sales. 1.2 rupee of sales. So that is called as a capital turnover ratio. Everyone, please tell me, understood up to the capital turnover ratio concept clearly or not? Everyone? Okay, well, so finally, one more time, I am telling you what is the point we are discussing here. Capital turnover ratio. Capital turnover ratio means what? Turnover or sales divided by capital employed. Liability side, what is the capital employed? Liability side, debt and equity. Normally, debt na short term and long term capital we need to take. But ICA has said that capital employed formula, they are taking only long term. How I know that they are taking only long term here? Because when they do the question on assets side, they are taking fixed assets plus current asset minus current liability. And when you are taking the assets side, you are not taking FA plus CA. If you take fixed assets plus current assets, you are taking total assets. But minus current liability, now short-term liability they are removing. When they are excluding short-term liability on asset side computation, uniformity sake, they need to do the same also on liability side computation. Therefore, ICA is taking debt means only long-term debt. And next, sir, equity you need not get doubt. Okay, equity you need not get doubt. Equity share capital, preference share capital, reserves and surplus minus fictitious assets. Minus fictitious assets. So these are all the various points that one need to understand. Okay, so this is the end of the discussion on capital turnover ratio, which is one among the activity ratios that we need to cover up. Okay, see, with this we are going to stop our today's session on ratios. FM class 1.5 hour is completed with this. Tomorrow's class again, anyway, we are having law and FM. Law and FM. In that again we are going to cover this, and we will do 12 marks questions, 1 or 2 questions we are trying to solve in the tomorrow's class. Okay, because we are having still, we need to discuss about fixed assets turnover, working capital turnover, debtors turnover, stock turnover, creditor turnover. That will take around 30 minutes. Profitability, this will take 10 minutes. Okay, after that we need to discuss on this one. This one will take hardly 5 minutes time. After that we are start going to do questions. 12 marks question that came in examination we are going to do. We are not going to do small bacha questions. There are 12 marks question that came in exam. Okay, so this 12 marks question we will do. If time permits, we will do another question, or else a 12 marks question we are going to do in the class. Whatever is there in our question bank, every question we are going to do. All unique questions we will do in the class itself. Are you all having a clarity? Yeah? Don't eat everything in first day itself. Okay, slowly, one by one, every day we will have a progress like this. Okay, don't ask for 2 hours a day, 3 hours a day. Consistently you stay live for 1.5 hours every day for each subject. That itself is a success. Because now we are learning this now. What you have to do after going home or after the class, you have to sit, revise whatever is discussed now. Once you do the proper revision on this, you will remember things. Tomorrow we will do remaining parts and we will do problem now. Again, you have to revise that. So 1.5 hours is our class time, half an hour is your revision time. Why you will not pass in exam? Yeah. Okay, well. So please, once for all, everyone tell me how you felt about the FM class for the first day. Not even a single minute we are going to discuss any nonsense in the class. No unnecessary, unwanted motivations. No nonsense discussions in the class. 1.5 hour, 1.5 hour we'll put only on subject. Any discussion, anything we discuss will be relating to the class only. No nonsense. Okay, no boasting, nothing. So we have to understand this concept in a proper way. That's it. We are having a little time. In that little time, let us do whatever best we can do. Okay, done. Is it useful for CS? Obviously useful. సార్ స్పీక్ ఇన్ తెలుగు చెప్పి ఏం మాట్లాడాలో చెప్తే మాట్లాడతా తెలుగులో. ఐ కెన్ స్పీక్ ఇన్ తెలుగు, ఐ కెన్ స్పీక్ ఇన్ తమిళ్, ఐ కెన్ స్పీక్ ఇన్ ఇంగ్లీష్, ఐ కెన్ స్పీక్ ఇన్ హిందీ. నీకు ఏ లాంగ్వేజ్ కావాలో చెప్తే ఆ లాంగ్వేజ్లో మాట్లాడతా. కన్నడ, నో నో నో. ఈ సాలా కప్ నామ్దే, దట్ ఓన్లీ ఐ నో. I've been to Bangalore multiple times, but I didn't learn that for various reasons because I was there only for 10 days like that. So, but Tamil Nadu is not like that. Now it's my second home type. So I'm emotionally connected to that state. Malayalam, never I came here. Sorry. If you make me learn, I will. I'm a very good learner. If you make me learn, I will learn. I respect all the languages. Malayalam, I don't know. I know only Mohanlal, Mammootty, Suresh Gopi. Beyond that, I don't know anything. I watch all dubbed movies. TTFM material I will share. Okay. Tamil, why I will not know Tamil here? Tamil Nadu is here, yeah, here. You are not understanding how much I love. That is my second home here. You are not understanding how much I am emotionally connected to them. Kannada, I will learn, yeah. At least for you, I will learn. Who is that? Ananda. You make me learn, yeah. If you make me learn, I will learn definitely. Rashtriya Bhasha, Hindi, yeah. Sir. Unless and until there is a need, I don't speak in Hindi. Japanese, huh? What I said now? Translated. Fictitious assets के example, fictitious assets assets only for namesake. Miscellaneous expenses not written off. Okay, P&L account debit balance, accumulated losses. Those are only to balance the balance sheet. There is no use with them. Okay, there is no use with them. Literally, there is no use. Okay. Mm. It's like a curry leaf in rasam. It is there to balance something, but we don't consume it, not throw it away. அந்த மாதிரி. Okay. RCB. Babu, namaste. Please don't create any dispute now. Okay. Please don't create any IPL problems in our classes. Sorry. Okay. Thank you very much. RCB. Okay. Va? But personally, I don't like it. Okay. You need not force me to like it. For 1.5 hours, see, slowly once we go into the discussions every single day, we can increase 15, 20 minutes like that. We will increase. That's not a problem. Minimum, it will be 1.5 hours a day. Okay. Take a 10, 15 minutes maximum break. Come back. We'll start with our DT. Please, everyone stay live. That shows your commitment here because I am also taking class equally along with you. Can we begin? Please inform all your friends in all the groups, Telegram or in the respective WhatsApp groups. If you have the friends, please inform them the class has started. So Hanumant is asking, is it useful for CS executive? Yes, it is useful for CS executive. Okay, so let us begin. Join fast. So let us start with the second day of our DT lecture. So this is the day 2 for the DT class. In the first day of the class, we discussed about tax rates, wherein we found out the tax rates for individual, HUF, AOP, BOI, artificial juridical person, and others. And others. Others like in who will come? Company, firm, cooperative societies, local authorities. So we observed that these are all the others. And we understood that when it comes to individual or HUF, AOP, BOI, etc., or for others, we are having two types of regimes. Number one is a default tax regime, optional tax regime. Default tax regime is the normal tax regime that we have to apply under section 115 BAC. Okay. Next one, optional tax regime is a general tax regime as per the rates given in the Finance Act. So how these both will have an influence? Now, in other tax regime, optional tax regime, you are having individuals, all these people divided into age category. Okay. So if you are less than 60, less than or equal to 60 but not more than 80, more than 80 years, normal, senior citizen, very senior citizen. For these people 2,50,000 is the starting slab. For these people, 3 lakh is the starting slab. For these people, 5 lakh is the starting slab. This is the optional regime. But when you come to the default tax regime, there is no age bifurcation. Directly, there is only one concept. All individuals, all these people are divided into various categories on the slab basis. 4 lakh, 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, more than 24. Okay, 0, 5, 10, 15, 20, 25, 30. These are all the rates that were given. And company, all these things already I said na. For company, the rate of tax will be dependent on assessment year 23, 24. Reasons I will tell you later, yeah, not now. Okay, when we come to that point, I will explain. So in that case, 30 or else it will be 35%. Okay, 30% will be the rate of tax. Foreign companies ke 35%. Firms standard 30%. Cooperative society up to 10,000 no tax, 10 to 20 and more than 20 like that. The tax slabs were given 10% and 20. Local authority same like a firm. So these are all we have already discussed in the last class. I am just revising the points we have already done in the last class. Are you all with me? Did you at least remember what we have completed in the last class? Everyone? Can we move on to the next part? Okay. So more than or equal to, by mistake I have given less than, more than or equal to 80, 60. So sir, anyway, we have discussed all these things. See, what we started with optional tax regime. We discussed this. Then we directly went to company taxation. Company taxation and others also we have discussed. Normally 25, other cases 30, foreign company 35%. Okay. So surcharges we are going to discuss now. Okay. Next, concessional tax regime. Concessional tax regime. The rate of tax is very simple to understand. See, concessional tax regime up to 4 lakh no tax, so 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, more than 24. These are the rates given. Okay. Surcharges we will discuss. Surcharges we will discuss. Okay. Next, doubt number 2. Sir, under concessional tax regime, will there be any difference in case of company taxation? Normally, companies are taxed at 25, 30. Na? In default, in concessional regime, the default regime also same. Listen. If for domestic companies, listen carefully to this discussion. Okay. Yesterday we did not discuss this. Concessional tax regime in different cases. Section 115. For domestic companies governed by section 115 BAA, tax is not 30, not 25, 22% of your total income. But to get this lower tax regime, you should not claim, and you should forego deductions under 10AA, export linked deduction, 33 AB, deductions with respect to tea, coffee and rubber account, 33 ABA, site restoration fund deduction, 35 scientific research deduction, 35 AD, investment linked deduction in PGBP, additional depreciation, section 32 la explanation. So these things, if you can forego, I will ask you to pay tax only at 22%. It's a tax planning measure. Chartered accountant has to tell whether to take 22% and forego those, or whether to claim those deductions and pay at 30% is entirely tax planning. So, this is 115 BAA. So, if any company wanted to claim a lower tax base of 22%, then forego 10AA, forego 10AA, forego 33AB, forego 33ABA, forego 35, forego 35AD, forego 32 additional depreciation. Okay, sir. 115 BAB. I heard that 115 BAB is there. Some students. Tax is only at 15%, not on total income basis, on income from manufacturing. Income from manufacturing. If you are having income from manufacturing, on that income there is a separate rate, 15% tax. And technically the PGBP will be taxed at 15% only. Okay. So when you should be a domestic company, you should be in manufacturing of anything or an article, you should set your business after 1/10/2019 and commencing its manufacturing on or before 31/3/24. If all these three conditions are satisfied, you can avail 115 BAB on your manufacturing income. You need to pay tax only at the rate of 15%. Next, foreign company, this concept is not applicable. Okay, this concept is not applicable. Directly, normally you go to the normal provision, 35% tax. Next, individual HUF AOPPY governed by section 115 BSA, already we discussed. Firm, not applicable. Directly go to 30%. Cooperative society, again, like this, 115 BAA, 115 BAB, 115 BAC for individuals, all these things we have already seen. 115 BAD, 115 BAE. Cooperative societies, same concept. Cooperative societies in manufacturing, same concept. Okay, well, first of all, everyone tell me, did you understand the concessional tax regime or not? Everyone, reply. Everyone is asking DT notes. I will definitely do. Okay, you first listen to this and write down. Write down or just listen and understand. I will share immediately after our class. Okay. Okay. If you say yes, I will move on to the next one. I will share the notes. I said na. Okay. So this is the point here. Stay in connect with the Telegram group. I will share the notes there. Okay, va? Stay in connect with the Telegram group. All notes I will share. Sir, anyway. Now listen carefully to the surcharge discussion. Okay. Always students are finding it difficult. Always they are forgetting in exam. Intentionally institute is asking questions in such a way, surcharge will get attracted. Whenever surcharge gets attracted, generally marginal relief will come. Both are interlinked discussions. People are forgetting that they are losing marks. So let's not do that. Let's have a clarity. Okay. Let us begin. See, surcharge rates. Surcharge rates. As I said already, DT is a 50 marks paper. FM is a 50 marks paper. But law is not like that. Law is a 100 marks paper. So our time spent on DT and FM will be having a high level of time will be available for us. So to some extent we can go on a slow pace. So I will explain every line point. But law is not like that. It's a 100 marks paper. FMDT is a 50-50 marks paper. So in that, what we can do, the 70 days, 50 marks we will cover anyway. 50 marks DD, 50 marks FM2 web. But law is not like that. So presence of mind more required for law, because speed will be there. But DTFM, na, confidently you can listen to every point. I will explain and I will make you expert in these two subjects, because those two subjects will come again in final as well. So please be careful here. When benefit is available at large at free of cost, please avail that in a proper way. Okay, 1-2 days after, once we transfer to the app, you will get the confirmation mail. Everything you will get by tomorrow morning. Okay, once you get, once app, like once we shift, I'm telling you, if you are not serious, you will be out from the class. I'm telling very seriously about this point, because these sessions I'm taking it so seriously this time, because I don't want any failure to come. If failure comes because of ICA mistake or some extreme reason, okay. After learning, if you are failing in exam, then what is the point of learning? Yeah, it's an insult to the faculty also. That should not happen. Okay. So now we are going to start with the concept of surcharge. So I want every one of you to listen carefully. Those who are not coming into live, coming and going, I can't help you. Okay, you have to listen carefully to the surcharge discussion we are going to start. So that's why DTFM, no problem. Slowly we can take. But law, I may take extra time also. Means if it is 1.5 hours, I will take 1 hour 45 minutes, or sometimes 2 hours also I will take. You should not say no for that. Okay, va? You should cooperate with me, because I am doing all this for you. Clear? Huh? DTFM, na, even 15 minutes lesser also, no problem. Slowly we can take up and complete each and every point. But law is not like that. I may take 15 minutes extra. Okay, so you should be ready for that with regard to law. DTFM, forget about it. Yeah, happily we will complete. Okay, and tomorrow I am giving you the schedule. Weekly schedule I will give. Okay, weekly schedule, and what are the topics we are going to discuss in that week in DTFM, and we will also do the variance analysis and what we achieved and what we did not achieve, such that I will understand and you will also understand where you are going slow. Clear? Okay, well, let us begin. So surcharge I will discuss, okay, and I will give time for you to read for today, because surcharge will take time also. Okay, so don't eat everything in DT in one day. That's what I am trying to tell. Once we start doing the problems in DT, just like that, chapters will go on, but concept will take time. Now that's why I'm explaining this. Surcharge. What is a surcharge? Surcharge is a tax on the tax. It is a tax on tax. In India, earning more income is also a crime. If you are falling into high income category, according to the government, whether it is high income for you or not, they don't listen. According to the view of the government, if you are in a high income category, I will impose a tax on the tax. Now, normally, on what you will pay tax? I pay tax on total income. Total income, how many heads are there? 5 heads are there. Salary, house property, BGBP, other capital gains, other sources. Okay, I will add also the other person's income being a clubbed income. On that, I will take set of carry forward deductions, gross total income, other advance tax, other TDS adjustments we will do. Finally, total income will come. On that, I will pay the tax. So, tax liability computation will come. On that, again you will pay tax. Why? Because you are a wealthy man according to the government view. Who is wealthy according to government? Okay. Surcharge rates. First, we are going to discuss about individuals. We are going to discuss about what? Individuals. Okay. If the total income of an individual, once I say individual, same applicable also for individuals, HUF, all those things, I will tell about that much later. If your total income is less than or equal to 50 lakhs, or 50 lakhs, 49, 48 lakhs, something like that, no surcharge impact. So first quality and understanding is what? What is the first point to understand? If your total income is less than, if your total income, not gross total income, Listen carefully. After all set-offs, carry forward clubbing deductions, total income. If your total income is less than or equal to 50 lakh, there is no surcharge on your total income, on your tax. Second, no, sir, I come under 50 lakh to 1 crore category. Means what? It is more than 50 lakh, but not more than 1 crore. It is more than 50 lakh, but not more than 1 crore. And what does it mean? I fall under the second slab where my total income is 60 lakh or 70 lakh or something like that. In that case, there is a surcharge. What is the rate? We will discuss later. Total income is more than 1 crore, but not more than 2 crore. Total income is more than 2 crore, but not more than 5 crore. Total income is more than 5 crore. Total income is more than 2 crore. Sir, mad, sir. Total income more than 2 crore already you have written here. Up to 5 crore. Again, why you are writing? There is a meaning for that. Other student confusion. First remember this table. Okay, wa? First remember this table. No question you will do wrong if you follow my table properly. Okay, I have again given easy summary. If anyone can do this easy summary, you will never commit a mistake on surcharge. Start. Total income, how many slabs? 6 slabs. Total income less than or equal to 50 lakh. Okay, more than 50 less than or equal to 1 crore. More than 1 crore less than or equal to 2 crore. More than 2 crore less than or equal to 5 crore. More than 5 crore. Last is a separate special category. Total income more than 2 crore. Now question. Rate of surcharge. Surcharge rate is not same for special income, for other income. For special income, it is same in the first two slabs. Okay. And special income ki 10, other income ki 10. Special income 15, other income also 15. Okay. But for the fourth slab, if your total income is more than 2 crore, but not more than 5 crore, on special incomes 15, on other incomes 25% is the surcharge. Total income is more than 5 crore, then on special income 15, other incomes 37. This 37% is substituted with 25% if you are following a concessional tax regime under 115 BAC. This is as per optional regime. If you are taking concessional, now everything is same except that 37 will be substituted with what? 25%. 25%. Total income more than 2 crore, 15 and 15 again. Okay. So I did not understand. Read the notes below. Read the notes below. In point 1236, 1236. Okay. 1236. Total income. Total income 1236. Total income including special income shall be considered. Means what? In this total income, special incomes also should be added. Okay. In point 45, total income excluding special income shall be considered. Excluding special income. And in this total income, special income should not come. Excluding them. So what is a special income? Long-term capital gain under 112A. Short-term capital gain under 111A. Long-term capital gain under 112 other assets like residential properties, etc. Dividend income. First three are stock market incomes. Next one is a normal capital gain. I did not explain anything. I just read what is there. We will go into the explanation once we complete this. First of all, I want every student to read the notes properly for 2 minutes. I want you to read it first. Get everything into your mind. Concentrate. Get everything into your mind first. Read it properly. This table, if you can read properly and remember, no one can stop you from understanding surcharge, margin relief, and tax liability computation. 10 marks is in your hands. I told now how the 10 marks will come. Okay. First of all, everyone tell me, everyone understood the concept? Okay. Let us now understand the discussion. See here. Please, I'm requesting everyone, apply your mind, put your mind here and read this. Okay. Don't be somewhere else and read. You can't understand this. Okay. See, what is a surcharge? First, understand that. Surcharge is a tax on the tax already paid. Okay. It's a tax on the tax. Sorry. So why government has to impose surcharge? You are a high income individual. Why should I not tax you? Okay, that's the kind of intent the government is having on high income individuals. They are saying that you are anyway getting high income na, pay tax on tax, pay tax on the tax, higher tax zone look you will be falling into. Sorry, okay. But what government said na, your total income is more than 50 lakhs. Your total income is more than 50 lakhs. Okay. Your total income is more than 50 lakhs because of what? Because of salary income, house property income, because of capital gains, because of capital gains, because of capital gains. Listen to the logic of the lawmaker. And what is the intention of the revenue government? Okay, revenue, whenever I use the word intention of revenue department and a government. What could be the government intention in imposing the surcharge on two different rate bases? Listen, they are asking a simple question. Kaushal Mukesh, do your total income have a capital gain? I said yes. Oh, capital gain income means what? It is a non-recurring income. It is a non-recurring income. Sir, I will sell the buildings every year, sir. Then sale of building will become your main income. It comes under PGBP as a real estate transaction. Okay. Capital gain income is not a recurring nature. It is non-recurring in nature. Means what? If a person is falling into surcharge this year because of capital gain, I can't give a guarantee that he will again fall into surcharge next year because capital gain may not be there. Hey, you are not understanding here. See, my income is income from salary 40 lakh per annum. How much? 40 lakh. And I am under surcharge, not under surcharge, not under surcharge. During a year, I sold my property worth 80 lakhs. Okay, 80 lakhs worth at 100 lakhs. I made a capital gain of 20 lakh. Now what will happen? 40 lakh is the salary income. 20 lakh is the capital gain. Now my total income is more than 50 lakh. Now I will fall under surcharge. But what government is thinking? Okay, you will impose surcharge on him undoubtedly. But next year anyway he will not come to surcharge. Now again it will become 40 lakh. Therefore, on special incomes which are non-recurring in nature, which are casual in nature, which will come only once in every 5-6 years, on those incomes, anyway, government is imposing tax from 1 rupee itself. See, for example, I got a capital gain of 20 lakhs. What government will tell? Long-term capital gain without indexation, 12.5% straight away tax. And what does it mean? 0 to that much no tax. Like that concept don't work on capital gain. Capital gain income is a special income. Special incomes are taxed at flat rate. And that particular 20 lakhs income straight away taxed at 12.5%. 2,50,000 I have to pay the tax. And already we are not giving him a slab option. Already we are torturing them from 1 rupee itself. Therefore, again, surcharge la don't tax him at high rates because of two reasons. One reason, slab rates you are not anyway giving them benefit, you are torturing them from the first rupee itself. Second one, these are all incomes which won't come every year. If something comes every year, now you tax them at a higher rate consistently, government also will get revenue. Capital gain this year, if you get the next year, can you give guarantee that that fellow will get a capital gain? No. The reason behind this. Everyone reply, did you understand the logic of the lawmaker or not? Why surcharges are like that? I want everyone to answer. So, what is the lawmaker intention? Yeah, intention was very clear. This year capital gain will come, na next year it will come or not, who will know? Can you give guarantee? Yeah? House property, I can give a guarantee because he's having a property with him. So if he has a property with him, definitely rental income will come. Even though he don't collect the rent, we will charge on expected rent basis. Na? So we will get revenue. Salary, he do the job, na, he will get salary definitely. PGBP, he do business, profit may change, but profit will come. Clear? But capital gains, I can't give that guarantee. This year long-term capital gain came because I sold my asset. This year I got short-term capital gain because I sold my asset. This year I got dividend because company declared dividend. This year I got long-term capital gain because I sold my residential property. That does not mean every year I will get this. When every year you are not getting this, why you are charging tax at a higher rate? As if it is consistently coming every year. And moreover, on this you are charging a flat tax rates. Okay. See, except dividend income, long term, short term, long term, all these are taxed at a flat rates, either 20 or 12.5% or 15% respectively. Capital gains chapter, we will see the rates of capital gain there. So logic is very simple. Simple logic is point number one, consistent revenues ki high tax is understandable. But when income itself is doubtful, this year and next year it will come or not, don't unnecessarily that shows the greed of the department. And what is the intention of the department? If a person makes sudden income, first to fall on him and take his money. That's not a right idea from the government point of view also. Let him enjoy, yeah, sometimes. Clear? Or else, whenever you make high gain, I will fall on you and I will take means, that doesn't look good. That much government started thinking. You may get a thought process, sir. I am anyway getting capital gain only once, na. That one time they should fall and take like vulture. That shows your vulture culture, which is not correct. Correct or not, everyone? So law is about understanding the motive of the department. It's not about reading some nonsense and mugging up the contents. Clear? Huh? And what government is thinking? When he makes a high income, all of a sudden, if we say that pay tax at a higher rate, now that shows greed of the department. Why you have to do like that? Clear? So, what they said, they divided incomes into two parts. One is a special income, another one is other income. Special income enna? Long-term capital gain under 111A, short-term 112A, short-term capital gain under 111A, long-term capital gain under 112, and dividend income. These all are special incomes. What they said, na, first see 1, 2, 3 and 6. 1, 2, 3 and 6. 1. Total income with the special incomes. 2. Total income with special income. 3. Total income with special income. 6. Total income with special income. Total income with special income. Next, what is 4? Total income excluding special income. Excluding special income. Total income excluding special income. Also in this case. And what you have to understand, fourth case, fifth case, total income excluding special income, if it is more than 2 crores, what does it mean? Your major recurring income itself is more than 2 crore, I will charge at 25%. This is not greed for money. You are getting consistent higher revenue, pay the higher surcharge. Even in this case. But concessional tax regime, 37% concept is not there. This will be substituted by 25. Therefore, this concept will not come. This concept only will be there. Confusion will come. I will clear that once we complete the main optional tax regime discussion. Okay. So concentration. Point number 1. If your total income is less than or equal to 50 lakh, no surcharge. 50 to 1 crore surcharge. 10. Okay. More than 1 crore, but not more than 2 crores. Okay. 15. But if your total income, 1, 2, 3, 6, 4, 5 we are discussing now. Okay, if your total income other than special income means what? Your major income is there, na, salary, others. Those things itself is crossing 2 crore. Then you are having more recurring income, na, pay more, 25. Okay, pay more, 25. Special incomes always maximum 15%. Okay, reasons I told you. Total income excluding special income, say you are having 5 crore. Hey, people will misunderstand this way. First tell me, fourth case and fifth case la, I am having special income or not having special income. Fourth, fifth case la. I am having special income. I am not having special income. Fourth and fifth case la, I am having special income, not having. Yes, no. Tell the answer. Fourth and fifth case, I am having special income, not having special income. Perfect. Everyone gave wrong answer. Thank you very much. That's what I want. You should do wrong here, but not wrong in exam. No. Everyone is wrong. Everyone is wrong. Stop putting the answers. Everyone is wrong. Everyone is wrong. Everyone is wrong. 100% everyone is wrong. Okay, except few, very few. Except very few. Everyone is wrong. I did not tell you don't have special income. Even after excluding that special income with other income, say you cross this 2 crore, then why 15% will come here if special incomes are not there? Clear, everyone? Observation. That's what I say. See, some people answered after me saying that answer. I said, nah, wrong answer. After that, they changed the answer and they kept another answer. I have seen so many students who said no. Now they are saying yes. Clarity. You are missing clarity in direct access. You are not listening properly or learning properly. I don't know where mistake is coming from your side. Listen again. You did mistake, you listen again. Punishment. Listen. Fourth, fifth case la, I did not tell you don't have special income. If you don't have special income, why special income rate 15% will be there? I said without even considering special income, your other incomes itself crossed 2 crore or other incomes itself crossed 5 crore. Then your consistent incomes are more than 2 crore, more than 5 crore. Now, government will say, okay, your sudden irregular non-recurring is not there. Even without them, you are getting a more income. Now, pay surcharge at 25, 37%. Did you know, understand or not? Everyone, that's why listen. You are not listening. Your mind is somewhere else. You are not listening. Clear? Okay, yeah. So now what you have to understand, first 1, 2, 3, 6 la, including special incomes, you got that income. Okay, therefore what they said, for special income 15, other incomes 50. That's why if you see 1, 2, 3, 6 category la, sorry, 1, 2, where is it? Just a minute, yeah. 1, 2, 3, 6 category la, other incomes are also taxed maximum at 15%. When your total income is crossing 2 crore but not 5 crore or crossing 5 crore, even without special incomes, your other incomes are more. All other incomes enna salary, house property, PGBP generally. And these are recurring incomes. Okay, main business income, main house property income, main salary income you are having. That itself crossed na. That's a recurring nature. Why I have to tax only at 15%? Yeah. Anyway, I'm giving slab deduction for you na. First 2 lakh 50 or first 3 lakh or first 5 lakh no tax. I'm giving you so many benefits, standard deductions I'm giving on salary. Why I should not charge surcharge at a higher rate for you? That's why 25, 37K. But when you are following concessional tax regime, this 37 is replaced with the 25. When it is replaced with 25, what will happen? Fourth and fifth slabs are same. 1525. Therefore, if you follow concessional tax regime, if your total income is more than 2 crore, without special income, remember blindly, special incomes are taxed at 15%, other incomes are taxed at 25%. Everybody reply. Okay, wow. So some people are asking like this. So it means person having total income more than 5 crore have to pay tax 30% on slab, 37% surcharge, totally 67. No, see 37% is on 30%. and 9% extra, 9 to 10% extra. Okay. Hmm. See, that's why one more minute time I will give. Read. One more minute time I am giving. Read this. When I gave time, you did not utilize it properly. You wasted it. You wasted it. So read it again. Take a minute time. Okay. Okay. Now I will take you to a easy summary and how to understand and apply this for the exams. Okay. For the exams, how to apply this concept. See, total income is up to 2 crore. Okay. Total income is up to 2 crore. Ante this part. Okay. Total income is up to 2 crore. Ante 1, 2, 3 cases. Total income up to 2 crore will be divided into three parts. Total income less than or equal to 15 lakh, 50 lakh. Surcharge nil. Total income more than 50 lakh but not more than 1 crore. 10% surcharge. Total income more than 1 crore but not more than 15 or 2 crore. 15% surcharge. Means it is 0 0, 10 10, 15 15. So we need not write two times. Directly we have written both the special incomes and other incomes. These rates are same. Clarity part number 1. Whenever your total income crosses 2 crore, problem will begin. What they say, if your total income crosses 2 crore, one thing is common here. Your special incomes are taxed at 15%. Okay. Surcharge is 15. Other incomes. If your other income is up to 2 crore, surcharge will be 15%. More than 2 crore but not more than 5 crore, 25. More than 5 crore, it will be 37. If you are following default tax regime, this part will not come. Directly 25% only will fall. Okay. So I want every one of you write the easy summary on surcharge. Keep the heading summary on surcharge. You should remember when you are writing a revise for multiple times. Write down, please. Once you complete writing, you please let me know. Please write down fast. Okay, done. So now we have completed understanding the surcharge. Correct? So surcharges we have completed. Now let us see the surcharges on companies. Surcharge on company, if it is a domestic company, if it is which company? Domestic company, and if the total income of that company is more than 1 crore but less than or equal to 10 crore, domestic company 7%, foreign company 2%. Total income more than 10 crore, domestic company 12%, foreign company 5%. So these are all the surcharge rates. These are all what rates here? Surcharge rates. So total income more than 10 crore, but sorry, more than 1 crore, but not more than 10 crore. If it is a domestic company, surcharge rate is 7. Sir, why is it so less? Anyway, you are taxing them at a higher rate of 30. Na? Like individuals, you are not giving any slab benefit to them. Therefore, we are not charging them at a lower rate of surcharge, high rate of already high rate of taxation. We are bothering them. Therefore, 7% will be here. Foreign companies already taxed at 35-40%. Therefore, their surcharge rates are 2% and 5%. So total income only two slab. More than 1 crore but not more than 10 crore. 7% on domestic company, 2% on foreign company. More than 10 crore, 12% on domestic company, 5% on foreign company is the tax on tax. Foreign company normal tax rate is 35. Surcharge rates 5, 2 and 5. Okay, keep the heading surcharge on companies. Surcharge on companies. So 1 minute time for you. Okay, and moreover, don't rush me. Complete it. Go to the next part. Okay, I am going slow on basics because I told the reason clearly. This is a 10 marks area, not 4 marks, 5 marks, 3 marks area. 10 marks. Every computation, the final adjustment 2 marks will be given for basics. So like that, 6 problems will come. 6 into 2, 12 marks. Minimum 10 marks you will get, if not 12. So I can't leave a 10 marks area just like that. Okay, please don't suggest me to go faster or something like that. When we come to the problems, we will go faster, but not in the concepts like this. Okay, let me go with the proper timing. Read that. Write down clearly. Write down surcharge on companies. Remember, I am asking you to write because you have to remember this. Okay, surcharge on companies. Total income more than 1 crore but not more than 10 crore. Total income more than 10 crore. Domestic and foreign. Okay, 7 and 12, 2 and 5. Next, firm LLP and LA. Surcharge rate. Write down only the surcharge part, not the tax rate. Okay. Next, cooperative society. surcharge, same as domestic company, 7%, 12%, 7%, 12%. That's it. Okay, well, so now what we completed, surcharges. So finally, what is a surcharge? Yeah? Let us revise everything. What is a surcharge? Surcharge is a tax on the tax. High income category individuals, companies, etc. are subjected to surcharge. For individuals, what is the high income? More than 50 lakh. So slabs are given. More than 50, less than 50, less than or equal to 50. Okay, more than 50, not more than 1 crore. More than 1 crore, not more than 2 crore. More than 2 crore, not more than 5 crore. More than 5 crore. Okay, then there are another two. If your special incomes are dominating, okay, if your other incomes, your recurring regular incomes are dominating the total income, and that itself is more than 2 crore or 5 crore na, then you are not a normal person. Surcharge will be 25 and 37 respectively in case of optional regime. If you are not going by optional regime, but if you are going by default regime, 25% is the standard surcharge if your total income from the recurring nature of incomes like salary, house property, PGBP exceeds 2 crore. Okay, so this is the confirmed full discussion on the surcharge rates. Everybody please answer, understood up to here clearly or not? First tell me the answer here. Are you all comfortable up to here? Understood what is the surcharge and how it apply? Okay, yeah. So today in this session, I am not going to make you understand marginal relief. What I will do is I will make you understand how to take the surcharge computation. How to take what computation? Yeah, surcharge computation, how we need to take, I will explain in this class. Okay, see, illustration on surcharge under both normal and alternative tax regime. Rather than calling it as a normal and alternative tax regime, under both default and optional tax regime. Okay, illustration on surcharge. Okay, first of all, understand this illustration was taken from institute study material. This is not my own illustration. So if you do not listen, you are digging your own grave, not my mistake. Okay, it will be my mistake if I do not explain what is expected from the institute. If you don't listen, that is not my mistake, na? Okay, my work is to explain every point. If you can understand all these 5 cases and answer all the 5, because surcharges, no one can stop you. Pakka, undoubtedly. Okay, let us see. This illustration contains 5 different cases. Okay, this illustration contains 5 different cases. What are the 5 different cases? I am having 5 types of incomes again. Dividend, short-term capital gain under 111A, long-term capital gain under 112, long-term capital gain under 112A. Case 1. Dividend 15 lakhs, STCG 15 lakh, LTCG 25 lakh, LTCG under 112A 20 lakh, others 25 lakh. I will first tell you one thing. Dividend, STCG, LTCG, both sides of LTCG. These are all special incomes. SI, OI. Tell me. First 4 at a 15, 15, 25, 20. Next case 10, 35, 50, 35. Next case 51, 44, 42, 55. Next case 40, 35, 42, 50. Next case 100. These all are SI, OI. So what you have to understand, these all are special incomes. Okay, 15, 15, 25, 20. These all comes under special income category. These all have come under special income category. 51, 44, 42, 55, 40, 35, 42, 50, 50, and last one 100. All these comes under special income category. Comes under special income category. Okay, va? Okay. Now listen carefully. Dividend, STCG, LTCG under 112A and are special incomes. Others are other incomes, obviously. Okay. So let us understand the discussion properly. Case 1. Case 1. 15, 15, 25, 20, 25. First take calculator, total them. 15 plus 15 plus 25 plus 20 plus 25. How much it is? 100 lakh. Which category it fall? Second slab. What is the second slab? More than 50 lakh, but not more than 1 crore. Okay, more than 50 lakh, but not more than 1 crore. Until less than or equal to 1 crore. In that case, what is the surcharge rate on special income? 10%. Surcharge rate on other income? 10%. So what is the surcharge? 10%. See this. 1 minute time I will give after every answer. Not more than that. If you want, take a screenshot. After the class, I will share the notes also. Okay. Now the second case. 10, take 10 plus 35 plus 50 plus 35 plus 55, 185. 185 comes under which category? It comes under more than 1 crore but not more than 2 crore. Then what category it will fall? It will fall under 15% in both the incomes category. So 15 and 15. Surcharge at the rate of 15%, not on 185 lakhs, surcharge. Surcharge at the rate of 15% on income tax computed on total income of 185 lakhs. Once you say yes, we will continue. Okay. Now, next one. Next one. Case 3. Take calculator. 51 plus 44 plus 51 plus 44 plus 42 plus 55 plus 600. 792. 792 la 6 crores is from other incomes itself. When it comes other incomes itself is more than 5 crore, what is the surcharge rate on the special incomes? It will be, on the special incomes it will be 15%. On that other income, the surcharge rate will be income tax on that computed amount into how much percent? 37%. Okay, well, so see here, 15% on all these, 37% on this. Default regime if you do not, 25%. Okay, that 25% answer was given because it is as per default regime. If you take up as per optional tax regime, now that will be 37%. So surcharge will be computed as under. Okay, dividend, STCG, LTCG, all these surcharge 15% flat and 25% on surcharge on the other incomes. Clear? If you follow the default tax regime, 25. If you follow optional tax regime, then you will go to 37 slab. Clear? Huh? Since the total income is more than 5 crore, it comes under highest slab where we need to check total income excluding special incomes, and special incomes are subjected to 15, other incomes at 25 if you follow default regime. If you follow default regime. So we have done as per default and both optional. Na? So now we have first done under the default. Default default tax regime, alternate tax regime 115 BSE 25. Case 4. Okay. Take case 4. 40 plus 35 plus 42 plus 50 plus 110, 277. It is coming under which slab? More than 2 crore but not more than 5 crore. Under default regime, anyway it is 25% again. Okay, on 40 plus 35 plus 42 plus 50. On this 167, compute the tax and apply a surcharge at the rate of 15. On the balance, 25. Okay, so total 2.77 lakhs. Oh, sorry. 1 second. Oh, sorry. Other incomes are 110, na? Okay, I'm very sorry. Very sorry. So total 40 plus 35 plus 42 plus 50 plus 110. Total 2.277 lakhs minus 110, 167. If the other incomes are coming under 1 lakh category, and in this particular summary, very sorry, I thought total is 277. This category we will fall. See, fourth one la total income excluding special income, say it should be more than 2 crore. But in this case, total income excluding special income is not 2 crore. It is 110 lakhs only and 1.1 crore. So it does not come under this category. It comes under the sixth category. Sixth category total income more than 2 crores is how much? 15 and 15. Okay, 15 and 15. Final touch. Okay, final touch. What is the question? Dividend 100 lakhs. Dividend 100 lakhs. STCG not there, LTCG not there, 112A not there, others also not there. Only dividend income is there. If only dividend income is there, it comes under what category? 100 lakhs, so total income category, which is a special income category. Therefore, surcharge will be 10% for him. Since there is only dividend income, it is tax plus special rate surcharge of 10%. Since total income is less than or equal to 100 lakhs, that is 1 crore. Everyone, please answer. Did you understand the discussion clearly or not? Okay, that's it. With this, we have completed discussion on surcharge. Discussion on what? Surcharge. See, I will give you one homework question. Take a photo for this. Okay, you should come with an answer in the tomorrow's class for this. Okay, next class you are going to come with an answer. After that, we will do marginal relief in the next class. Okay, one at a time. So don't take all the food in single day. Once marginal relief we come na, with marginal relief we will complete all the basics. Okay, after basics we are going to start with the next segment called as residential status and scope of total income. The biggest one in our syllabus, one of the area. Okay, residential status is not a problem. Scope of total income is a problem. Section 9, if you see, there are totally 7 pages notes in study material. Okay, if you do not read, that's not my mistake. Na? You should read it in a proper way. Section 9. Okay, so in the next class, I will re-explain case 1, 2, 3, 4, 5 one more time fastly. Just in 2 minutes, I will complete. And then we will be going into surcharge and marginal relief computation for more clarity. Okay. Marginal relief time, we will discuss agricultural income discussion. Okay. There only it will come. Agricultural income. And moreover, listen, I will show you one point here. Try to understand this. Just for your understanding, see here. Normally, this is the document common for both inter and final students, because Residential status concept and scope of total income is there in inter as well as at final. So you can see this document, residential status. People underestimate the chapter, residential status and scope of total income, because residential status na easily we can do. No, don't be under that impression. Unnecessarily you will feel regretted. Okay, so one up to here, okay. Summary, the section 7 or 8 up to there, okay. See here, section number 9 will start here. Okay, section 9 will start here. Where it ends, I will show you. Section 9 is the overall idea. Business connection. 9.1a read with section 9a. 9.1.1 read with section 9a. Concept of business connection. Bare Act. Full Bare Act analysis. Okay. Going on, continuing na. Still we are in section 9 only. Section 9.1.6a. Still we are in section 9.1.7. Still we are in section 9.1.1 explanation. Read with explanation number 7, sub explanation number A, rule number, clause number 1 and 2. Okay, connected sections to that. With that, we complete section 9. Do you know what is the length of section 9? You can see the page numbers here. 93 pages are there. You can see here. Here exactly. 93 pages. Section 9. That is the range of section 9. Actually, why I wrote that much notes? Na? Section 9 is there at inter, also at final. Inter ke that much is not required. Okay, some are not applicable, but for final, this particular segment falls under the concept called as international taxation. You can see the heading there. Okay, international taxation. International taxation kya we need to discuss that much at free final level. Okay, va? So I will provide you the DT complete notes also. First, I will share you with the chapter which we have already completed now, and then we will be going into the next segment. Okay, so next class we are going to do a complete analysis on. Okay, next class we are going to do a complete analysis on marginal relief, agricultural income, solving the questions and answers till now. All exam questions, there are around 12 exam questions with me. All 12 exam questions we are going to solve. Once we complete that, we are going into the next segment called as residential status and scope of total income. Okay, well, so in a sequence we are going to do first those two will complete. Next we will come to capital gains directly. Capital gains, other sources, and sequence I told you in the last class already. Okay. Okay, tomorrow's class is law and FM. Okay, tomorrow class law and FM. Law we are going to complete that unit 1, but mainly law, I told you na, managing director, manager, all these questions are coming in exam, so we will concentrate on that. People who are doing for group number 1 na, FM you just attend till it is possible. Okay, after that no problem. Next batch again, if we start FM you can join then. Okay, so anyway, please tell me everyone in the class how you felt about the today's session. Did you feel it important? Did you feel something value addition has been done for you? Everyone. Yeah. Thank you very much. Next class will be more valuable for you. We are going to learn some new things. Even I did not take them in the regular classes. Definition of managing director, definition of manager, but they're kept in the study material and asking questions in RTPs. So those we are going to discuss in the tomorrow's class. Don't miss the class. I'm telling you seriously. Okay. So thank you very much. Romba Nandri. We'll see you again in the tomorrow's class. Okay.